Aloha. Welcome to Abe Lee Seminar Sessions. This tape is going to be talking about the conveyance tax. So what is a conveyance tax? Well, we have all kinds of taxes. In Hawaii, on the mainland, federal government, county taxes. But the conveyance tax is assessed against the seller when a transfer is made of property that sells for value. An example would be, if you have a lease of 5 years or more, and there's a value to that lease, and let's say the lease value is $300,000 over the life of that 5 years, then the state wants a conveyance tax on the $300,000 value. And the state has a sliding chart of from, say, $1,000 or whatever the minimum amount is to $599,000. Then from $600,000 to the next bracket, and on and on. So every time you have a conveyance of a certain dollar amount, they have a tax rate, a conveyance tax. So the ones I remember I will share with you. All right. So the seller is supposed to pay the conveyance tax. But does the seller always pay the conveyance tax? Well, in some really big deals that I've seen, like there's a shopping center that sold for $700 million, if you can believe it. And the conveyance tax was $1 per hundred. So my calculation is that the conveyance tax was $7 million for $700 million worth of property. The seller was a big landowner. They're not paying the conveyance tax. So my guess is that in the purchase price, the conveyance tax was calculated and added to that price. So the actual price may have been $700 million minus the $7 million. But anyway, the conveyance on that deal was $1 per hundred, $700,000 in conveyance tax. Holy mackerel. So if you sell a condominium or property for, say, $500,000, then it's 10 cents per hundred. So that's a heck of a lot better than $1 per hundred, right? So there's a sliding scale. The more expensive the property, the higher the conveyance tax. Now, they added another wrinkle to it, and the state said, hey, if the buyer buys a property and they don't qualify for homeowner's exemption, in other words, they're not going to live there. It's going to be a second home, or it's going to be an investment property, then they have an added tax. And what I remember is there's a 10 cents per hundred, and I believe it's 15 cents more or 5 cents more. So it's 15 cents per hundred if the buyer doesn't live there. And on the over 10 million, it's $1 per hundred. And if you don't live there and it happens to be a residence, then it's $1.25 per hundred with a 25% additional tax in addition to the $1 per hundred. And that's over properties that are $10 million. So if you buy something in Lanikai or Kahala, and it happens to be a $20 million property, the conveyance tax is pretty stiff. So the conveyance tax usually is paid by the seller. But in some cases, as I mentioned, this big shopping center that was sold, I'm almost certain that the seller said, I'm adding the conveyance tax to the purchase price. So yes, the seller paid for it, but ultimately the buyer paid for it. So the conveyance tax is based on sales price. And if you qualify for homeowner's exemption, then you have the base rate of the 10 cents per hundred or $1 per hundred. Or if the buyer does not live there, then the conveyance tax is going to be an additional tax. And I think, if I remember right, it's 10 cents or 15 cents per hundred for under 600,000. And for 10 million and over, it's $1 per hundred or $1.25 per hundred if you don't qualify for the homeowner's exemption. If you qualify for a homeowner's exemption and you're buying the property, escrow will usually give you a paper that says, apply for your homeowner's exemption as soon as possible. So the buyer will then apply for homeowner's exemption, and so they don't get, by the way, there is a homeowner's exemption amount. For example, if you're under 65, then the homeowner on Oahu gets a $120,000 exemption on the annual taxes. Now, this is different from the conveyance tax. All right. So I don't mean to confuse you, but there's taxes galore. So the conveyance tax is based on a one-time sales, but homeowner's exemption is annually. So if you live there and you have a homeowner's exemption, then you're going to get $120,000 deducted from the value of the property. So you save $3.50 per hundred for that $120,000 exemption. If you're 65 or older, then you get a $160,000 exemption amount, and that's every year. So you have to apply for that homeowner's exemption when you close at escrow. And escrow will give you the paperwork and say, make sure you apply for homeowner's exemption. So there's a conveyance tax on the sale of the property, and the other is the homeowner's exemption that the buyer has to apply for. It has to be done by, I think, September 30th, because if you buy in December, then you have to wait till the next tax year to get that exemption amount on an annual tax. Conveyance tax is one time, every time it sells for value. Now, let's say a child is getting a property on a device. Device E, there's no value to that property. It's a gift. So there's no conveyance tax. So only when you buy property for value is there a conveyance tax. But if it's a gift, either in a will or trust, or you gave the property while you're alive, then there's no conveyance tax. Hope this helps on the role of what the conveyance tax does. Aloha.